the losses are coming in from Japan, where the Nikkei is down over 1.5% as we speak.
The cabinet has approved a bank guarantee waiver for telecom companies as a whole.
People will really hope that from here onwards, at least the FPIs can be a little, they can show some relief and respite.
Markets are really trying to figure out is what tariffs are eventually going to look like.
Finally, they've launched the $1 billion QIP book. The indicative price is 252.62, a nearly 7.5% discount to yesterday's closing price.
Okay, so about 90 points higher is how we've kicked things off. 24,300 is on the radar. But let's see if it will hold or not.
The Nifty is just above that 24,200 mark. The sensex is down 330 odd points. Autos, pharma dragging their feet, while IT is on the front foot.
Quite likely that, the insurance law amendment, whatever bill changes that be required to facilitate this, probably the bill amendments, could be tabled in the ongoing winter session of the Parliament.
So number of customers as per the Credit Bureau data, those who have more than 3, or that is 4 or more lenders, is roughly around 5.9%. You can round it up to 6%.
Nifty is struggling to keep up pace as far as the bulls are concerned, especially in the last hour of trade. You've seen selling pressure intensify, especially within the pharma pack.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that is the day so far, and markets are taking it a little easy. It's pretty quiet out there with a 30 or 40 point cut on the Nifty. Broader market, there is a lot happening. Lots of sectors are up 1%. At least 2 or 3 sectors are down 1% as well. So it's a pretty vibrant market out there. We'll, of course, track the last hour for you. I'm Prashant. With me, my colleague Surabhi and Rima. Guys, hi, good afternoon.
Hi. Afternoon. By the way, Europe is on the back foot today. So the CAC is down close to about 1%. The FTSE is down nearly 0.5%. And the DAX too is giving up, down 0.8%. So that's the market which is not looking good or supporting us.
But I guess not too many will be complaining, because after a 1,000-point rebound from the lows, maybe this was a pause that was pretty much expected. That's what we've got. And, beyond the Nifty, beyond the headline indices, I think there's still a lot of traction in the market. The advanced decline ratio is positive. So beneath the surface, I guess there's still plenty of activity.
Absolutely. And we got the first of Mr. Trump's tweets right? On the
tariffs. And many to come, perhaps.
Many to come. It's interesting. I remember Chris Wood, and not the last interview at our Global Leadership Summit, but the one before that. He said he called Mr. Trump intrinsically transactional and unpredictable. That is so. And, I was talking to somebody in the electronics and manufacturing space in India, one of the larger companies, and I was asking him what happens because of tariffs, etc. He said, I don't know whether it'll be good or bad, but it's going to be very uncertain next 5 years. Yeah. That was his takeaway. So, I think we'll have to, see what he does and how many times he does it, right? He does something, changes it up, and then does something else. And it'll have an impact on trade and sentiment and everything else as well. But, we'll talk more about that as we go along. We're down, 40 points, so it's not much at all. It's largely actually flattish. But, and the levels have not changed. So they should come up on your screen. And we put these out yesterday as well. They're the same, largely the same. So there was a bit of an overshoot above this level yesterday at the day's high, and then the market closed under it. That's a 40-day, 24,340 is that level. Now, of course, we are clearly below it, but not very far, 150 odd points away. The Nifty 20 days, you can take that as a support, 24,020. So that's on the downside, the support area. Or you can look at yesterday's highest point, which is around 24,000, 23,950 or so, because there's a big gap. Day before yesterday's high, beg your pardon, that's a big gap, and that should not be filled. So roughly about 24,000 is the number that you're looking at on the downside. Bank Nifty, the resistance zone is between 52,680 to 52,817. And we'll see if we're able to get up to it. And the support area is that gap, 51,271. And then to about 51,774 on the downside. As I said, lots of sectors are moving. Defense is making a bit of a comeback, and we'll have Nimesh join us in just a bit. IT, FMCG, these are the other two areas which are doing well. On the downside, it's autos which is taking a hit, and Sud will explain and tell us more. Pharma and energy are some of the other areas which are under pressure. Dima.
And the entire Adani Group basket is weak in trade. So there is news surrounding Adani Wilmar, where from agencies Bloomberg, we've picked up that Adani Wilmar is all set to defer the stake sale, and they will seek time from SEBI for the mandatory stake sale to bring it down to 70. They need to bring it down to 75% by February 2025. But given the market conditions right now and the news flow surrounding Adani, it appears they have chosen to defer the stake sale. That stock is down close to about 2%. But the rest of the pack is also weak, led by Adani Green, that's down 6%, Enterprises, Energy Solutions, Ports, Total Gas, all down about 2 to 3%.
Yeah, so there is some cool off in the Adani Group for sure. But look at the Midcap screen, and that's what I was talking about earlier. You've got so much of excitement on individual names today. So Hitachi is a stock that we'll discuss as we go along because of this major HVDC project that they have going for renewable energy and lifting of power, connecting power between Maharashtra and Gujarat. So that has worked very well for that stock since morning. Vodafone Idea, obviously because of the fact that now companies don't have to give bank guarantees on spectrum that they acquired before 2022. So that's worked very well for Vodafone. But beyond the newsmakers, look at Brainbees, 6.5% on first cry. Look at a stock like Triveni Turbine. And incidentally, Triveni Turbine was an idea shared by Amnish Agarwal of Prabhudas Leather this morning on Bazaar. He said this is one of the ways that he'll play CapEx. The stock has had a phenomenal day today. And there are more names. Look at EMS, for instance. It's up and about. Some of the defense plays like Garden Reach, Shipbuilders, they're doing really well. So there's a fair amount of traction and a good amount of green on the screen as well. So not looking too bad as long as the Nifty doesn't have a sort of major sell-off in this next 1 hour that we have in front of us. So let's get started then. What should be the trading strategies? What should be the ideas you can perhaps work with? We have our experts now joining in. Mitesh is with us. Mitesh, so it's quiet, but like we've been tracking the individual level stock action, it's not too bad. Index, any trades for the last hour?
Good afternoon, Surabhi. So, we have taken some mild long positions on the index, not yet completed the full because we're still waiting for some kind of, one more crossover happening on the 30-minute chart. But the good thing is that I think Prashant was highlighting this big gap which happened on the on Monday, which is yesterday. And I think that gap has support between 24,120 to about 23,950. So I think anything around 24,150 should be, an area where you would want to buy something and maybe add more if you get a 50-point further decline, and then keep 23,950 as your stop. I have highlighted the importance of 24,350, so that remains the first target. And once we cross that, 24,500, I think, could be the next level to watch on the upside. So the immediate bias is on the long side, is on the upside, and therefore, the short-term texture is to use any declines to add on to your index positions.
What would be the stock calls for the last 1 hour, Mitesh?
Yeah. So I have a buy on Biocon. I think that's giving a good price volume breakout today. Keep a stop below levels of 345 here. Look for a target of 370. And the other one which is on my list is TCS, which I would recommend buying with a stop below 43.20 for targets of 44.10.
Okay, all right, got it. So those are some of the individual names that are coming up. By the way, Shriram Finance is a stock in focus, and we'll try and play out some of the sound bites from our morning call with the management today. The management sounding extremely optimistic on all factors of the business, really, at a time when a lot of other lenders are looking at either slow growth or asset quality issues. This one's really standing tall, and the highlights really are that they're expecting steady growth with steady margins and credit costs being very, very well contained. So more on Shriram Finance in just a bit. Big Nifty mover, second day in a row. But for the time being, let's talk about the standout brokerage report of the day. Remember, in the morning, Nimesh alerted us on this JP Morgan call. JP Morgan sounding quite optimistic on some of the defense names after the recent correction. Nimesh, the stocks have really taken note. So let's go back and look at what JPM is saying.
Yes, sir, Beno. So all the defense stocks are buzzing in trade today, and JP Morgan actually put out an initiating report. It's a long report on the defense names. Within that, they have a initiating buy on BEL with a target price of 340, a buy on Hindustan Aeronautics with a target price of 5135, a meaningful upside for both these names from current levels as well, and a neutral rating on Mazgaon Dock with a target price of 42.48. Now, for the sector, they believe that the sector presents a very long runway of structural as well as value accretive growth on back of a couple of reasons. The first reason is increasing capex. So, JP Morgan estimates $150 billion of capex over the next 5 years versus just $85 billion of capex in the previous 5 years. So that's going to go up for domestic names. The second is the export opportunity. JP Morgan sees a very large export opportunity as well for all the Indian companies. So they are penciling in a nearly 46% CAGR over the next 7 years for the Indian defense companies as far as the export opportunity is concerned. And the third is that there is a big focus on the domestic production, which and on top of it, high ROCs as well as on strong cash flows as well. So given the recent correction in all these names, most of the stocks are down almost 30-40% from the recent peaks. They believe that it's a good entry point to get into these incumbent players, largely because all these companies provide a good 15 to 17% EPS CAGR as well as a strong ROE of between 23 to 33%. So that's the reason why they've turned bullish on some of the defense names and have initiated a buy on BEL as well as on Hindustan Aeronautics.
Thank you, Nimesh, for that. We'll come back to you for more stocks like Zomato that you've been looking at. But for now, let's invite Gurmeet Chadha from Complete Circle. Gurmeet, would you concur? Is it attractive enough, the current levels, BEL, HEL?
Yeah, I don't know. There's some problem. I've been trying to do it.
Okay. Gurmeet, can you hear us?
Yeah. Sorry, there was some overlap. Yeah. So, I think, so we have HAL in the portfolio amongst PSUs and BEL. HL, if you see, I think by the end of Q2, you should have about 1.3 lakh crores of order, which is roughly about 3.5 times FY24 revenue. So the near-term visibility looks good. Quite a diversified order mix also. So almost 100 LCAs, then about 150 light combat helicopters. Then they have the trainer aircrafts, which are used for extensive army training. And most of the contracts have variable pricing, which gives you some protection on margin in case, because these are long gestation products, and more than 60% comes from repairs and maintenance. So it looks solid. The stock is also corrected from 5,500 levels. We have solar industries, Pinaka rockets. If you see, they have recently supplied to Armenia and Vietnam. France seems to be interested. So in guided Pinaka rockets, they have 100% market share, and the others, they are the L1 bidder. So this opportunity could be 15,000-20,000 crores over the next 3-4 years. It's a high margin business, and the current defense mix is just 20%. That can go up to 30-40%. So that's another one in our portfolio. And then we have Zen Technology. Zen is mainly an IP defense tech, more into counter drone and simulators. They've just got their 20th patent now, amongst the highest patent holders in India. Expensive stock, but it's something which relies on innovation. So these are the few names we hold, and using any dips to basically add on it.
Okay, let's get to, the Zomatos and the Swiggies of the world. Swiggy, by the way, is also higher by nearly 5.5% today. This is after UBS initiated coverage with a buy target price at 515. They say that Swiggy will lag Zomato on profitability, but being the second largest player in delivery and quick commerce, it will benefit from the rapid growth in both the segments. They have lost market share last year to Zomato, but according to their channel checks, the company has addressed the fundamental issues, and therefore they will be able to arrest their market share and at least stabilize it. Swiggy trades at a 35 to 40% discount to Zomato, and that should narrow as the market share stabilizes. So that's Swiggy, and that stock is inching up 5.5% higher on that. But let's get to Zomato, which is also surging in trade post the QIP launch. Nimesh is here with the details. Nimesh.
Hi, Rima. So first on the news part, which is the QIP, that got launched last evening. They're looking to raise $1 billion, which was part of our story as well. And the indicative price is much lower at 252, but I understand because of the strong demand, the stock is actually in the green and up to 1%. Now, this would mean an equity dilution of close to 3.5% on the floor price. So that's a rough calculation. Now the impact part, why it is important and how it's going to impact the MSCI angle as well. One, when we broke the story, it was very clear to us that this fundraising is essentially been done to reduce the FI holding below 50%. Currently, the FI holding is close to 51. And after this QIP, which is largely going to be dominated by domestic funds, the expectation is that the FI holding will fall below 50%. What I understand, even when we broke the story a month back, the feedback was that after this QIP issue gets done, the company is likely to write to RBI requesting for an FDI cap of 49%. Now, this is going to be quite interesting, right? And Jeffries actually, has written about it a month back when we did the story. And they very clearly said that if indeed this is the case that the company asked for a cap of FI limit at 49%, it will help the e-com business, and that's the whole idea of doing this QIP. But this could also mean that eventually, the stock gets deleted from MSCI. So that's the next level to track as far as the MSCI angle is concerned. Well, Jeffries do believe that it will take some time for these adjustments to happen. So it may not happen very immediately as per the Jeffries note. The other thing to watch, and which is part of my chatter yesterday as well, that after the QIP issue, there is a very high possibility of another large block where one of the strategic investors could see a clean out trade. So that's the next thing to watch out for as far as Zomato is concerned. But for today, as far as the QIP is concerned, I understand there's a very strong demand, and hence the stock is recovered from the lows as well.
Okay, all right, got that, Nimesh. Thanks. So that's a lot of Zomato paper hitting the market. $1 billion of QIP, and then maybe another investor looking to sell a portion of their equity, as Nimesh is pointing out. Thanks for that, Nimesh. Indeed, there's appetite for food delivery and quick commerce, and the stock has recovered from the lows of the day. Thank you for that. Let's go to Gurmeet and get in a word. Gurmeet, hi, good afternoon. Hope you can hear us fine now. So Zomato, what's the sense? There's just too much happening in quick commerce, right? There are also brokerages now that are pointing out that perhaps Swiggy is, you play the same story at a more attractive price. I don't know if you believe that or not. Then there is the upcoming threat from Amazon. Your thoughts, quick commerce, and whether Zomato makes the cut for you?
It does. It's been part of the portfolio now for a while. We got lucky. We were also one of the few players who were very keen on unlisted space in Swiggy. Started doing this at around 300 levels, right up to 350. So far, even that looks good. I think the play is more on quick commerce now. I think various estimates are there. I think this could be a 60, 70, $80 billion market in next 4 or 5 years. And so there is a lot of potential here. Currently, the number is 2,000 crores for Zomato on a monthly basis. This number can become 4, 5x, which means that is going to drive delivery. And so if you see reason quick commerce is successful in India, not as much in the West, is our distribution network, our retail outlets, etc. Our reach is 3-4 times of any developed market for most FMCG and other companies. And the digital adoption and the pace at which it's picked up eventually is getting reflected here. So I think the call is basically there. If any estimates go wrong, then I think the valuations will take a bit of a knock. But I think it's a short candidate. And also I think their district app, where they're now trying to demarcate out-of-home consumption, which is your ticketing business, dining out business, could also be the one to watch out for. That can probably add a little bit more to the tailwind it has. So pretty constructive there. Only in this space the issue is the winner takes all, and it's heating up now. Zepto has actually launched Zepto Cafe, where they can deliver food in 10 minutes now. So and then you have Big Basket and others also coming in. So usually winner takes all. So you got to put one bet on the winner, and then maybe to have protected blind spot, have a couple of more, maybe a Swiggy, maybe something else. So dominantly Zomato, and just to cover the blind spot, maybe Swiggy or maybe one other name.
Gurmeet, you said Swiggy, you guys have been picking up the unlisted space from 300 to 350.
Yes. The market was very hot, Prashant, for almost 3 to 6 months before the hike.
Yeah, no, absolutely. And so you guys are already sitting on nice profits. So congratulations. Now, I just want to make two sort of news points here. One is with regards to Adani Wilmar. So there was this news from Bloomberg that Adani Wilmar is set to defer stake sale. They basically needed to sell down stake to meet the mandatory minimum public float requirement. And they have time, and they've asked SEBI for an extension. They've sought time from SEBI to meet this mandatory requirement. So the deadline is February of 2025, and they've reached out to SEBI, according to Bloomberg, that they should be given more time. Just one more name I want to look at is Reliance Power, if you can put that up. And this also came through, and the stock is up about 5%. The Delhi High Court has granted a stay on Solar Energy Corporation of India's notice of debarment against the company, including all its subsidiaries, including Reliance NUBESS. There you go. That's a stock on your screen. That is also, I think, limit up, moved up starting the middle of the day, and that is now, I think, almost at the high point of trade out there. So that's the picture right now. So market, by the way, the Nifty came back into the green, and now we're actually trending absolutely flat, 4-5 points lower, 24,200 or so is where we find ourselves at this stage. Just a quick word, Gurmeet, any sort of, do you have names like Gokuldas Exports, etc., apparel makers in your portfolio?
Yes, we have, Prashant. So if you see, you will not make too much money on the commoditized business of textile, which is, let's say, weaving, spinning, which is a low margin business. But let's say home textiles and garment exports is a huge business. I mean, our share is for 2% versus, let's say, Bangladesh in double digit and China, etc., being very high. I have a lot of local clients in Delhi NCR who are not listed, but they have been upping up their limits. One of them recently took a enhanced packing credit limit, which is in foreign currency. To he does 80 crores. He's expecting about 110 crores this year. So there's pickup there, and I think the opportunity size is big. Gokuldas is largely US. It does your Superdry, Puma, Adidas, American Navy, all those brands. And now the inquiries are coming from Europe since they acquired a company in Africa. Because there's a 12% duty on Indian garment exports, which Bangladesh doesn't have. So I think with a lag of 1 or 2 quarters, you will see the likes of Gokuldas and some of the integrated names like KP Arments doing very well. I think this is one opportunity. Also, it's a huge employer. 90% of the staff is women, right? So it's politically also, makes sense. And I think India has a lot of potential here. So we are very gung-ho here, both in Gokuldas and KP Arments.
Okay, all right. There was a news report, I think 2 days back. Gap, which is a US retailer, raised their guidance significantly. Stock was up some 14-15%. And Gokuldas does work with players like Gap and other large retailers in the US, etc. as well. So, I mean, order books for till the end of the year seems reasonably strong. And of course, generally sentiment in the US is looking up and up. Gurmeet, thank you very much for your time. Great speaking with you. Appreciate it. We're going to take a quick commercial break here. Our first on the show here. We come back with Mithun Ashwath of Kiva Advisors on the other side. Conversation follows with him on market. Stay with us. Okay, welcome back. We got the market, which is actually absolutely flat. It's like a traffic light, blinking red and green, nothing. Half a point, 1 point change, 24,219 as we get into the last sort of 30-40 minutes of trade. Mithun Aswath is with us, managing partner at Kiva Advisors. Mithun, good to have you with us here. Thank you for your time. Do you own any defense names, PSU defense names, Mithun, in your portfolio? And what's the view there? There's that JP Morgan upgrade on the sector. Stocks have come off. I mean, of course, you look at something like an HUL, it is up 10 times in the last 4 years, and it's come off about 30-35% from the top. But, and of course, I can sort of name others as well. Just your thoughts here on the space. It's getting more coverage and maybe a little better prices as compared to 6-7 months back.
Yeah, afternoon, Prashant. I think on the defense space, we do have some selective opportunities which we continue to hold. They are PSU companies as well, but we also like power capital goods, which are public sector companies. We think that opportunity is also kind of a secular opportunity. They're coming off maybe 4 or 5 years where these companies were not even making profits. And they're way off their, highs in terms of revenues. But on the defense side, I think, there is secular growth opportunity. Valuations in some of them had got, exaggerated. I think that correction has happened. I think one needs to disconnect the opportunity size and the valuation. Now, the opportunity size, I think, is very large. I think we are still touching the surface. There are private sector companies also which will benefit from this. Even there, the valuations have gone up quite a bit. But I think one needs to look at this space with a longer-term point of view. And whenever these deep corrections do occur, one can obviously take some positions.
Mithun, hi. Afternoon. Rima here. What about on food delivery, quick commerce, Zomato versus Swiggy? Both, neither, or one of the two?
Afternoon, Rima. Honestly, we've not, invested directly. We hold a holding company across our client portfolios. So we played it like that because I think at that stage, we were still not sure of how this will evolve in terms of profitability. And so we continue to, do it indirectly by holding the holding company of, Zomato.
Okay. All right. So that's the take on quick commerce. So, Ashwath, I mean, what's the sense? Have you made any major changes in the portfolios in the last 2 months while we've been in this, slight cool-off and correction? Because the market's also gone through a churn, and suddenly the narrative is now coming back to capex stocks, which have fallen, defense, capex, etc., which have fallen the most in this cool-off period. What's your stance here?
Surabhi, there is lack of growth, and that is why markets corrected. Especially in Q1 and Q2, you didn't see too much of appreciable growth in a number of spaces, and that's why you saw a market correction. You saw it across the board. But if you say capital goods, defense, these companies continue to have strong order books, and growth is not really an issue. It's about execution now. If these companies are able to execute, they will still deliver growth. The pockets where there is concern, I think, are more sectors which are consumer-oriented. These have also corrected. We need to see maybe Q3, Q4, is there a rebound in the rural economy, which will again help demand perk up. We also have a wedding season, which has started in Q3. So there will be pockets where, even there will be growth. So I think the market is distinguishing between where there is some visibility of growth and where there is a lack of it.
Okay, by the way, a lot of ratings actions over Adani Group companies in the last couple of days, and the latest one is also coming in. So that's kind of completing the trio, S&P, Fitch, and now we also have Moody's taking specific actions on different group companies. And we'll flash out some of the specific lines that are being spoken of. And we've seen other commentary as well from Total to, of course, a couple of state governments that have been a little cautious on future contracts or immediate work with the Adani Group. So outlook has gone to negative on 7 of the group companies, and the stocks are noting that they are under pressure today. Okay. Mithun, just wanted to get your sense on financials. Before I ask that question, actually, let's just run through some of the commentary that we got from Shriram Finance. And this is a stock that's actually been doing very well. It's up almost 8% in the last 2 trading sessions, 5% yesterday, 4% today. Now it's cooling off a little bit. But the momentum has been fairly good in the past few trading sessions. What did the management tell us today, this morning on Bazaar? We had them on. One is that they are not seeing any slowdown in demand for vehicle financing. It's going on a very, very steady clip. 2, this whole threat of whether whatever is happening in MFI, could there be any kind of second or third degree spillover impacts? I mean, if there's one borrower which is defaulting on a bunch of loans, could there be any interconnectedness even in things like used CV financing, used two-wheeler financing? The clear answer to that was a no from the management. They, in fact, went on to say that the credit cost, which is around 1.8% right now, will max go up to 2% and no higher than that. Quite optimistic on growth, saying about 18% growth is possible this year. And most interestingly, they also promised steady margins. They're not expecting any kind of a major compression in NIMs this year. So all around positive commentary coming in from Shriram Finance. Now, Mithun, comment on this. Shriram has been a bit of an outlier. Some of these companies, some of these NBFCs, a bit of an outlier because otherwise, either growth has fallen because you're going slow on the higher yield business, which is personal loans, etc., or there is a bit of a pressure on margins, or there are issues on asset quality. It's a combination of 1, 2, or 3 for many other lenders. How are you looking at financials?
Yeah, to be honest with you, I think, Survi, you have seen concerns on the unsecured and personal loan side of the books of most banks and financial institutions. Obviously, MFIs have borne the brunt of this. But I think there are a few names like the one you mentioned, as well as, the Murukaba Group finance company, where, we've not seen too much of impact on asset quality as of now. So I think you need to focus now maybe on players who are good at risk management, because in the good times, everybody grows the balance sheet. But in terms of risk management and controlling credit costs is what is going to distinguish the companies. So I think that is where one needs to really focus their energies on, because you can just do growth, and then if credit costs balloon, then you've seen what's happened on the MFI side.
Okay, all right, Mithun, we'll leave it there. Thank you very much for joining us. It's a pleasure. Thank you for taking out the time and being here. I just want to quickly mention one name here, and MFIs, that is microfinance lenders, and there's a story we will address. But I was just looking at Credit Access, which has come up about 100 rupees from the lows. The absolute low was about 860. This is 3 days ago. Stock's at about 960 right now. So, of course, it's fallen a long way. It's essentially halved in value, but that is seeing some amount of interest started to come back. So keep an eye out on this one. Now, mixed signals are coming in from the auto space, the auto sector in November, with two-wheeler sales growing strongly while passenger vehicle sales remaining under pressure. Sudarshan is here with the retail sales data for November so far. So over to you.
So it's the Vahan registration data, the all-important numbers that all the companies have been talking about. If you remember, after the Q2 results, most companies in their commentary did mention about that more than wholesales, the numbers that matter the most are retail sales. And taking the cues from there, we have here tried to analyze the Vahan registration data for the month of November. Let's see what those numbers indicate. In a nutshell, on the demand perspective, it's a continuation of what we saw in the month of October. Two-wheelers remain the biggest outperformer, followed by tractors, whereas demand for passenger and commercial vehicles remains muted. Now let's come to the numbers, and before we talk about that, do remember the comparison numbers are for the entire month, whereas for this month, the data is for 25 days so far. So starting with two-wheelers, the pickup in rural demand seems to be reflecting in the numbers of Hero MotoCorp. Total registrations for Hero MotoCorp have already surpassed the numbers of October and are just 3% lower than November 2023. For TVS Motor and Bajaj too, the registration details are looking healthy, And the numbers are already at par with what we saw last month and are down just 4% and 11% respectively against November 2023. Royal Enfield, while it's currently underperformer amongst two-wheelers, but the data of last few months indicates that Royal Enfield sees a surge in registrations during the last few days of the month. The next in the list are tractor segment. Here too, registration trends are looking healthy with 5 days to go in this month. For M&M tractor, registrations are down less than 10% both month-on-month and year-on-year. And for Escorts, the decline is slightly steeper in comparison to M&M. It's down in the range of 15 to 17%. Shifting to the segments where demand concerns remain are passenger and commercial vehicles. With only 5 days to go this month, most companies are seeing sharply lower registrations. The numbers are down in the range of 40 to 52% month-on-month and are down 21 to 40% year-on-year, with Maruti and Tata Motors looking the weakest. Before ending, it's important to remember that the comparison numbers both month-on-month and year-on-year cover the full month, while the current data for November represents only 25 days. This gap means significant changes could still occur in the remaining days of the month.
Okay, so two-wheelers revved up and passenger vehicles not such a great month from the looks of it. Thank you very much for that, Sud. Let's quickly move on. Madhya Pradesh Chief Minister Mohan Yadav is on a state visit to the United Kingdom. The minister visited the King's Cross redevelopment project and interacted with the Indian diaspora during his visit. He pitched the central Indian state as an upcoming investment destination for overseas Indians. He urged NRIs to focus beyond Indore, which is considered the state's commercial hub, and sought more support for the tourism and medical sector in the state. The visit underscores Madhya Pradesh government's commitment to fostering industrial development and building meaningful partnerships beyond investments. Okay, on that note, we'll take a break. Back with more in just a bit. Back with the markets in just a moment. Welcome back. So back to the markets, getting some news from Angel One. The AMC has gotten the approval of the regulator to start a mutual fund business. So one more joining the mutual fund bandwagon there. Angel One stock's also doing well, up about 4.5% right now. Big spike coming in over there. The market obviously absolutely loves all capital market facing businesses, whether it's broking, whether it's something like wealth management. And in this case, it is an AMC that is being set up. So that's Angel One. We'll talk about that stock in a bit as we go forward. Right now, let's move to D Street Chatter. Nimesh is back with us, so let's see what he's picking up. Nimesh, a slightly quieter day, market pausing for breath after a big pullback. What are you picking up?
Yeah, yes, extremely range bound and been choppy as well. And in fact, the Nifty has been managing to consolidate around that 24,200 level. So that's an important technical level as well to watch out for. Having said that, the FIs again continue to be better sellers. So again, the feedback today is the buy sell ratio is close to 1:2 on the sell side. So yesterday what we saw was only because of the MSCI rebalancing a very large FI number. From a broader market point of view, that's where the traction seems to be. There are a lot of individual names which are buzzing in trade today, and in general, the flow seems to be quite positive in the broader market stocks. For second day running, the feedback is that there is some bit of interest back in select PSU names from the larger FIs. So that's one space which has been well bid. The other sector which has done well today is the consumption names. So a lot of consumer-facing stocks have done well today, largely in anticipation of a strong second half. So some renewed buying in that sector, but broadly from a Nifty point of view, the feedback is the FIs continue to be better sellers.
And what about stocks? What have you picked up in terms of chatter?
Well, as I said, there is a lot of interest in the broader market names, Rima, and that's why most of the names today are part of the broader market stocks. So the first name is Carnex Micro, a small stock and even thinly traded, so we don't talk much about it, but that's been buzzing off late, and I understand the company is likely to bag a very large order soon. So that's the reason why that's part of my list today. The second name is BEL. I spoke about the JP Morgan note and the fact that all the different names are buzzing in trade, but BEL stands out also in back of very strong buy flows. Expect high delivery volumes in BEL, and looks like some FI interest is back in that particular name. The third name is Muthoot Micro. Again, a small company, been buzzing off late. Even today, the stock is up on good volumes. Interestingly, after a very long time, some FI interest seems to be back in that name. So that's why it's part of my list today. Some bit of FI interest is back in Muthoot Micro. And the last is Akum Drugs. The stock has seen a big derating in the last couple of months. Looks like the selling from the private equity investor is largely over. There is a small buying interest from larger FIs today. So that's Akum Drugs. After a big correction, some bit of interest seems to be back.
Okay, thank you very much for that. There was also news on Akum Drugs where they've done some partnership to launch a particular beverage. So that came out earlier today. Mitesh is now back with us for a few BTST calls. Mitesh.
Yeah, I think I have a BTST on Syngene with a stop at about 904 for targets of 925, and the other one is Federal Bank, which I would recommend taking a BTST position with a stop at 212.4 for targets of 216.
Just a few other names I want to highlight. Thanks very much, Mitesh, for that. Look at Sagility, which is the recent listing. That's a player which works with insurers and essentially works in the insurance ecosystem in the US. And it's up 10%. So it's a large move on Sagility, which is coming through. We'll have that up for you. K Fintech is another one which I saw, which is up. There you go. That's Sagility. And that's a big one-day move after listing. I think we've not had a 10% move in this one. It was a very muted listing as well. K Fintech is something else, which is looking up about 5.5%. Sonata Software is coming up with decent-sized gains. So that's looking up. Ola Electric, the promoter and the CEO, MD Bhavish Agarwal, put out a tweet on a battery, a new introduction of a new battery in the market. I mean, they've opened sort of bookings, etc. for it. The stock's up about 5.5% right now, but I think it's been strong since the morning. And of course, there is Swiggy, which is also looking pretty good. Actually, I spent a minute or two on Swiggy. UBS, of course, initiated coverage earlier with a buy rating. Mangalam is here with the rationale and what they're saying. Mangalam, over to you.
Well, the rationale that UBS has for Swiggy is that of, settling or narrowing discount with Zomato. They say that it's well positioned for growth and trading at 35% discount to Zomato as against, the current price, which indicates that it's at a near 50-55% discount to Zomato itself. On online food delivery, they believe that it's catching up to Zomato on margins and scale. Quick commerce, while there are encouraging signs, there is still more work to do. They expect both Zomato and Swiggy's online food delivery GMV to grow in low 20s itself, but adjusted EBITDA margin for Swiggy's food delivery business would go to about 2.8% by FY27. Remember, the company itself has said in the past that it can, once the industry matures, settle at around 5% itself. So they have a target price of 515 rupees on the stock. However, apart from that, the key to track for quick commerce going forward would be increasing fundraisers and competition in the quick commerce space. Nimesh has been talking about Zomato's QIP, the $1 billion QIP itself. Swiggy itself raised about 4,500 crore in via fresh issue. Very recently, last week itself, Zepto went ahead and raised about $350 million from domestic investors. And all of this while the big daddy Amazon has announced its quick commerce foray as well with Tez. So increasing fundraising by competition and increasing competition itself is something that we'll have to track, apart from obviously UBS's positive stance on the food delivery business for Swiggy.
Thank you very much for that. By the way, PSU banks today are holding up in the green. So while the Nifty bank is absolutely flat, PSU bank is higher. And remember this whole news flow about the bank guarantees being released for telecom companies. It's also positive for banks like State Bank of India, IDBI, IndusInd Bank, Canara, Axis Bank. They all have exposure to the telecom bank guarantees. And the fear was that if things go south, then maybe some of those bank guarantees could turn into NPAs. And now that is out of the window. So that's a positive on the sidelines. But let's get to the Insurance Amendment Bill. Now that is expected to be introduced in the upcoming winter session of the Parliament. What does this amendment bill bring, and why is it the boldest reform in India's insurance sector? Yash joins in with more. Yash.
Well, Rima, our colleague Sapna Das from Delhi today reported that the winter session of the Parliament is likely to take up the Insurance Amendment Bill. This has been long awaited by the sector, and as you said, it's one of the boldest reforms that the sector could see. There are 5 important changes which the Insurance Amendment Bill is likely to bring in the insurance sector. The first one and the biggest one is composite insurance license. Essentially, this particular aspect, enables or facilitates cross-entry of insurers into each other's segments. So essentially, life insurance companies, if this gets approved, can operate in the health insurance space. They can sell health insurance policies or any other segment of the general insurance companies like motor insurance, and vice versa. General insurance companies or health insurance companies can also enter the life insurance space to sell those policies. What does it do? Brings greater amount of competition in the sector. The second one, distribution of other financial products. Insurance companies, if the bill gets approved, then can sell other financial products like distribute other financial products rather, like mutual funds, bank deposits, FDs, loans, and so on and so forth. Opens up new revenue streams for insurance companies. The third one, reduction of initial capital to start insurance business. Currently, an insurance company needs to bring about 100 crore to start business. Reinsurance companies, they need to bring 200 crore. That capital is proposed to be reduced, and it will be different for different companies depending on the size of the business. The fourth one, captive insurance license. Conglomerates or business groups can have their own insurance companies limited to serving their own employees. Of course, that will be an important one. And fifth one is relaxing investment regulations. Currently, insurance companies can only invest up to 15% in equity. Other part of the investment has to go in government debt or corporate debt. Now, with this particular proposal, insurance companies will be able to increase their equity investments or increase any other form of investment subject to the regulator's approval.
Okay, all right. Thank you very much for that. So 5 changes which this amendment will really bring about. We'll, of course, track the passage of this one when this is brought to the Parliament in the winter session, as Sapna told us earlier. Yash, thank you very much for that. We actually earlier spoke with Alok Misra, CEO and Director at Microfinance Industry Network, over new lending norms for MFI loans as well. So I just want to sort of play out some of these sound bites because that's a space which has been under immense pressure. Take that break. We'll see you on the other side.
When you talk about portfolio at risk more than 60 days, default, that is, we typically if you take 60 to 180, that would be somewhere in the range of 3 to 3.5%. We are trying to strengthen the practice of LUC more. One is productive use. That is for the institutions to do a loan utilization check and ensure that it is used for the purpose for which the loan is given. And the second question which you asked in the start was relating to how will this adherence be ensured. So let me tell you that we don't, the sector body and SRO, we don't believe in just merely issuing guidelines and leaving it there. In July, we had issued one set of guardrails, and the adherence has been quite positive from the sector. That is what our checks reveal. And these are data checks, empirical data checks.
Welcome back. Looks like it's going to be a flat finish for our markets. 10 minutes left, less than actually more than 5 minutes left for markets to close. Jay Bala from cashthekiosk.com is with us on the show. Jay, we've had 2 nice days on the trot and today we've moved sideways. What are the technicals telling you about the near term?
Hi, Rima. Good to be here. The market's counter trend bounce that started from 23,265, that seems incomplete. and the emphasis is on the word counter-trend bounce. So well, from a very short-term perspective, I anticipate the market to drop to somewhere close to 23,800 and then rise up to somewhere close to 24,400, maybe even 24,800. But that kind of bounce will probably lull the market players into a complacency, thinking that buy the dip is back. But what lays ahead from a slightly higher time frame, what I said on October 1st, that still remains in play. The focus is on the June 4th, 2024 low. That's where this market is heading. The next leg is likely to be equally sharp or even more sharper than what we saw from the end of September. So the objective for market to decline to 21,280 remains the focus for the market.
Okay, all right. So you're retaining that call, Jay, that we are heading to the election, general election, counting day, intraday low. Okay, that's a big one. And what makes you sure of that call? I mean, are you seeing something coordinated across global markets, maybe with the US 10-year, gold, etc.? Or do you see this as a bit of a more isolated move here in India?
Yeah, fair question. This would be, Reliance, the 10% of the market is saying that recent low registered about 1220 and change. That's not the final low. So that's been the marker for me for some time. I've been saying that since August 20th, that Reliance underperforming is not good for the market. And if you look at HDFC Bank, today's high was a fresh 52-week high, and the market is not able to hold that. That's not a positive sign. Not yet a bearish sign yet, but if this were to finish negative today, that will be again not a positive sign for the market. From a global picture, the dollar index is doing something very unique. It went to a 52-week low and then came back to a 52-week high in 34 sessions, and that's very, very unique. That only other time that's happened is during non-normal time, which is during the pandemic. Other than that, in the last 30-year history, this has never happened. So that's telling you something very, very unique. And if you look at the US 10-year yields, it's likely to pull back somewhere close to 390, 380 bips, and then exceed the October 2020 to 2023 high of about 500 bips and change. And that's on a path to 800 bips in the long term, which I've been saying since 2021. So there's no change in that. And the US equity markets, it's likely to complete finishing sequence. It needs to top. The topping formation isn't there, but NVIDIA is starting to crack. If NVIDIA starts to trade below 132, the biggest macro for the world, that will confirm the global equity markets are also turning, and that will put additional pressure for the Indian equity markets.
By the way, the Midcap index was up nearly 0.5% just about 30 minutes back, and now it's completely flattened out. Pull up the Midcap index there. You've had that fall starting 3 p.m. The small cap index, though, continues to maintain its gain, so that's still up close to about 0.9%.
A letter of award coming in for RVNL, 625 crores from the South Central Railway. That's the sort of award coming in for RVNL. Stock, of course, did very well. All railway and PSU names did very well yesterday. Jay, any specific trades, stock-specific names?
Yeah, I have two for today, Prashant. One short and one long. The short is on Ashok Leyland. The drop from 264 it registered in September. It dropped to from there. It dropped 202 in a trending fashion, and the bounce from there on to today's high is looking like a counter-trend bounce. Hence, the stop loss at about 242 with a price objective of about 197, and a conditional long on Voltas. Voltas, the recent high it saw in September, it looks like an unfinished price structure. So, but the reason why I'm making a conditional is because of the overall market conditions. If Voltas were to cross 1715 on an intraday basis, that will mark the beginning of a rise to fresh 52-week highs. But if 1622 were to break before 1715, this is a cancelled trade, and you want to wait for 1715 to get taken out, and then consider the price objective of 1975, maintaining 1622 as a stop.
Okay, all right. So those are individual trades as well. Jay, by the way, and we can talk about this more in our next chat. When you talk about the dollar index, should we look at and some other dollar proxy? Because dollar index is 50-60% euro, right? So that kind of reflects maybe euro weakness more than I mean, so maybe something else. I don't know. And that especially now because the growth differential is so stark and is widening.
That's right. Fair, very, very fair, Prashant. Euro makes it about 57% of the dollar index basket. And the next comes to is JPY and the GBP. So I have a long-term call on the Euro USD cross. I'm expecting the Euro USD cross to drop to somewhere close to 0.8, and that's been my call since November 2022. And but the other equation that's probably playing out is the USD CNH cross, and that's probably an anticipation of tariffs. Maybe they'll make the Chinese market competent by depreciating the USD CNH. What does it mean to the Indian markets? The USD INR is behaving like a peg currency. So, it's more tracking more the USD CNH rather than the dollar index basket. And, the rupee remains strong. The cushion that the markets get by the depreciating rupee, the assets still remain overvalued. But had the rupees been depreciating, the fall for the Indian markets would have been shallower. But since the rupee is strong, the depreciation has to happen proportionately for the Indian markets.
Absolutely, and the point is well taken. It's like a not a proxy, but yeah, I mean the dollar against the Chinese currency and dollar against the rupee. I mean tracking very, very closely, and for good reason as well. Thank you very much, Jay. Actually, stay with us. We're going to come back to you in just a bit for more. Market ending absolutely flat. I mean, it's 0.12% lower, 24,193. The Nifty Bank is unchanged, 52,178. As Rima said, the mid-cap index did come off in the last 30-40 minutes. The small-cap index ends about 0.8% higher. Market breadth is strong. I mean, it's nothing exceptional, but 1450 stocks are up and about 990 stocks are lower at this stage. The Adani Group's names came under another round of selling pressure. So out of the Nifty, you had Adani Enterprises, Adani Ports, which were lower. But you look at Adani Green, which, by the way, is made a fresh low today, by the way, since the entire sort of latest episode started. And you look at Adani Energy Solutions as well. So this pack did come under another round of selling today. Auto names was the other pack. I mean, large cap auto. Look at something like a Mahindra & Mahindra, maybe, look at Bajaj and Maruti, etc. The auto index itself was down about 1.2%, and individual names are up on your screen as well.
Okay, with that, we're going to wrap on closing bell from the entire team. Thank you for watching. Don't go anywhere. Markets Forward comes up next.